What if I told you the world's greatest investor isn't a Wall Street whiz, but a man who made his first dollar selling chewing gum, a man who still lives in the same house he bought in 1958 and drives himself to work every morning? We're talking about Warren Buffett, the Oracle of Omaha. His journey from a curious boy in Nebraska to a billionaire legend holds the secrets to building lasting wealth. These aren't complicated formulas or risky gambles. They are timeless principles that can change your financial life forever. Are you ready to learn them? It all started not in a high-rise office, but on the quiet streets of Omaha, Nebraska. Imagine a young Warren Buffett, not much older than 10, meticulously planning his paper route, calculating the most efficient path to maximize his deliveries and his earnings. This wasn't just a kid earning pocket money. This was a CEO in training. His entrepreneurial spirit was relentless. He'd buy packs of gum from his grandfather's store and sell them door to door, piece by piece, for a small profit. He scoured golf courses for lost balls, cleaned them up, and sold them to golfers. He even bought a used pinball machine for $25 and placed it in a local barber shop. Soon, the profits from that one machine allowed him to buy several more, creating a small but steady stream of income. While other kids were playing games, Warren was creating them. His fascination wasn't just with money, but with the mechanics of business. How did things work? Where did the value come from? This curiosity led him to make his first stock purchase at the tender age of 11. He bought 6 shares of a company called City Service for himself and his sister. The stock price immediately dropped, teaching him his first painful lesson in patience. But when it eventually rebounded, he sold for a small profit, only to watch it soar too many times that price later. This experience solidified a core belief that would define his entire career. Investing is untable, timing the market. It's about time in the market. These early ventures weren't just childhood hobbies. They were the building blocks of his financial discipline, teaching him the value of a dollar earned and the power of understanding a business from the ground up. Every great hero has a mentor, a guide who illuminates the path forward. For Warren Buffett, that guide was a book. The Intelligent Investor by Benjamin Graham. Discovering this book as a teenager was like finding a Rosetta Stone for the financial world. It gave a name to the instincts he'd been following his whole life. Value investing. The core idea was revolutionary in its simplicity. Buy a stock for less than its intrinsic worth. It's like buying a dollar for 50 cents. Graham taught the importance of a margin of safety, a buffer between the price you pay and the company's actual value, protecting you from bad luck or errors in judgment. Buffett was so captivated by Graham's teachings that he applied to Columbia Business School specifically to study under him. He was the only student to ever get an A+ in Graham's class. Working for Graham's partnership after graduation, Buffett honed his analytical skills, learning to dissect financial statements and find those hidden bargains. But Buffett was more than just a student. He was an innovator. He realized that Graham's strict approach, which focused on buying cheap, often mediocre companies, had its limits. Buffett, with the influence of his future partner Charlie Munger, began to evolve. He shifted his focus from buying fair companies at a wonderful price to buying wonderful companies at a fair price. This crucial pivot from cigar butts to enduring franchises was the key that unlocked his astronomical success. He wasn't just looking for a quick profit anymore. He was looking for greatness he could own for a lifetime. Armed with Graham's principles and his own evolving philosophy, Buffett returned to Omaha and started Buffett Partnership Ltd. with just over $100,000 from a handful of family and friends. This was the launchpad. His strategy was simple: find undervalued companies and buy them. His results were anything but. He delivered stunning returns, consistently outperforming the market. One of his early home runs was with American Express. The company's stock was crushed after a scandal involving salad oil. While Wall Street panicked, Buffett did his homework. He went to restaurants and watched people still using their credit cards and traveler's checks. He saw that the underlying brand was strong, and the scandal was a temporary problem. He invested heavily and made a fortune when the stock recovered, but his masterstroke, The move that would define his legacy was the acquisition of a struggling textile mill in New England called Berkshire Hathaway. By the numbers, it was a failing business, but Buffett saw it as a vehicle. He slowly wound down the textile operations and began using the company's cash flow to buy other businesses and stocks. Berkshire Hathaway transformed from a relic of the industrial age into a modern holding company, a fortress of financial strength. Today, it's a colossal conglomerate, owning household names like Geico and Dairy Queen, and holding massive stakes in some of the world's most iconic companies. Look at Apple. Buffett initially avoided tech, sticking to his rule of investing in what he understood. But he saw Apple not as a tech company, but as a consumer products company with an incredibly powerful brand and a loyal ecosystem. He invested billions, and it's become Berkshire's largest and most successful holding. He invested in Coca-Cola because he saw a simple, durable product with a global moat that no competitor could cross. He bought into American Express and Bank of America during financial crises, betting on their resilience when others were terrified. Each investment tells a story of discipline, patience, and a profound understanding of business. So, how did he do it? How did one man build such an empire? It comes down to a set of powerful, deceptively simple rules. These are the golden rules of Warren Buffett, the core of his philosophy. First and foremost, rule number 1. Never lose money. Rule number 2. Never forget rule number 1. This isn't about avoiding any and all risk. It's about a mindset. It's about prioritizing the preservation of your capital above all else. Before you think about how much you can make, you must rigorously analyze how much you could lose. This forces you to be disciplined and avoid reckless speculation. His next great mantra is to be fearful when others are greedy, and greedy when others are fearful. This is the ultimate test of an investor's temperament. When the market is euphoric and everyone is piling in, that's the time for caution. The best opportunities, Buffett teaches, arise from pessimism. When a great company hits a temporary snag and the market panics, that's the time to be bold. It requires courage to buy when everyone else is selling, but that is where real fortunes are made. He also preaches the gospel of long-term thinking. His favorite holding period, he jokes, is forever. He doesn't buy stocks. He buys pieces of businesses. And you don't buy a great business with the intention of flipping it next week. You buy it to participate in its growth over decades. This patience is a superpower in a world obsessed with short-term results. And finally, perhaps his most crucial piece of advice, invest in what you understand. You don't need to be an expert in every industry. Stick to your circle of competence. If you can't explain why you're buying a company in a few simple sentences, you probably shouldn't own it. These rules, combined with the miraculous engine of compound interest which Einstein called the eighth wonder of the world, are the blueprint for building wealth. It's not magic, it's discipline. We've journeyed through decades of wisdom. From a boy selling gum to the Oracle of Omaha, we've explored his mentors, his greatest investments, and the golden rules that built his fortune. But I want to hear from you. After all of this, what do you think is Warren Buffett's most powerful piece of advice? Is it his focus on never losing money? His contrarian creed to be greedy when others are fearful? Or his simple wisdom to only invest in what you understand? Let me know in the comments below. I read every single one, and I'm genuinely curious to see what resonates most with you. If you found this video helpful and want to learn more from the world's most successful investors, make sure to hit that subscribe button right now. We've got more deep dives like this coming your way. And don't forget to share this video with a friend who needs to hear this story. Help us spread the wisdom. Thanks for watching, and we'll see you in the next one.